Hey, welcome to the 40 Finance channel, investors. Got some pretty big news today that I'm sure you've heard, which is this Merck, the drug maker, has a new COVID pill that they're testing as a treatment. There are guidelines about who can use it to treat their cases, and of course, we're still in clinical trial range. But on the bright side, they're heading into stage 3 of the clinical trials. Now, from a stock market perspective, this is very, very big for things like travel stocks and consumer cyclical, right? We have not really reached back to the full bore American spending, American traveling, all that stuff that goes on, not even to mention international. So this is big news, even though I'm guessing it's still several months away. But it was very interesting to see how the stock market is responding to this today on Friday. So I'm just going to go to the top gainers for today. Let me just refresh this because it's been hanging out here for a little bit. Now, this is not in order of percentage change, it's in order of market cap, but you see the names here. Disney, Merck, Uber, obviously consumer transportation. Not familiar with this name. Marriott, Hilton, not familiar with that. Pinterest, of all things, 4.3%. Southwest Airlines. Then we get into Carnival, Delta, Carnival, Expedia. It's funny, I just had Expedia on a video yesterday as a stock that I am watching, potentially as, travel starts to pick back up at a more normal level. Live entertainment is down here at the bottom, and even Enphase Energy. All right, so news like this has two sides, right? It has winners and losers. On the winner side, you're going to see names like Hilton, as we saw on the gainers page. And let's just look at Hilton for a second and see where this one sits. This is a 6-month chart. Let's just go year to date. And with Hilton, we can see, it's been a bumpy ride up since Jan 1, but you were at 107, give or take, to start the year, and now you're at 137, well above the 50-day and 200-day. And I think that this is the kind of news that just puts a stock like Hilton and all the others, right? Marriott, maybe Expedia, Booking Holdings, stuff like that. They're going to ride this wave. And I guess the question you have to ask yourself as an investor is, do you buy on the way up, or do you wait perhaps for an opportunity where it comes back down? Now we look at Airbnb. This is a much different company to compare to Hilton because you don't have earnings. It IPO'd very recently, looks like somewhere in the neighborhood of January or December. And this one skyrocketed up in February because the whole entire market was at all-time highs. And then it sank maybe back down to reality, but it's going to get another strong boost here with this medical news that's out. The question, I guess, becomes when you stare at Airbnb versus, let's say, a Marriott or a Hilton, the valuation metrics are going to suggest Hilton and Marriott. The growth numbers, though, will suggest Airbnb. The question becomes, do you want to pay the extended valuation on Airbnb for what could be a bigger reward in the future? Now let's think about the flip side of the Merck news. And that is a little bit of what we saw this week with tech stocks bleeding out, particularly the high valuation tech stocks. So I have Nvidia on here. And if we go on a year-to-date chart for them, it's been very profitable for investors. And I'm in no way projecting that anyone should sell Nvidia, but we are seeing some slippage here as you go below the 50-day moving average. And it wouldn't surprise me entirely if a couple more dollars shaved off of this one, just because it's running so hot. So while all this attention goes on to travel and some of the premiums come down for the tech stocks, do you go for the travel train, right, as it starts to build up if the Merck news continues, if we see declining Delta numbers, or do you zig when others are zagging? And the big question mark with tech stocks is just how far Could they go down, right? You know, anytime a stock is dropping, you get the falling knife argument about catching a falling knife. Yesterday, I talked about a company, Crowdstrike, that I'm interested in, and you can see that they have actually dropped now to 246, right in between their 50-day and 200-day. The problem is with a company like Crowdstrike, and they have a short history, so we don't have a ton of data to work with. But even if you just skip all the EPS of which they are, barely putting up as it stands, even just a simple price to sales. Back in 2020, you're at 30x. At the peak, I would say, of the stock market, which would have been, January heading into February, you're at 60x. So while it's come down, if today you're at 50x, how much of a sale is it? Taking a look at CrowdStrike projections here in Seeking Alpha, PE really just is not a thing, and it's not going to be for 3, 4, 5 years, to be honest with you. So we'll use price to sales as the backup, and if we got to 1.41 billion at the end of January, Yahoo had trailing price to sales at 50, the forward is 39. When this year actually is shipped and we start looking ahead to fiscal year 2023, then you'll be below 30, but at 28x. So these are the kinds of things that you have to think about when you're looking to zig versus zag, is like how much of a discount are you expecting, or how much do you think the price should go down because of the catch the falling knife syndrome? If you think you're getting CrowdStrike for a good deal today because it shaved $5 off its price, that is a good deal compared to yesterday, but if the valuation multiple keeps going down, well, we could see it go a lot farther. I was curious myself, what was the 52-week low for CrowdStrike? 118, 52-week low for CrowdStrike. Now, they have done a lot of good things in 52 weeks for the bright side. So I don't necessarily think that number would come in. But if we just go to recent history, August 17th, you had 233. And back on June 4th, you had 206. So while things like consumer cyclical is super attractive, a guy like me thinks about, well, what if tech goes on sale? Big growing tech companies go on sale. Problem that I see right now is they have a ways to go yet. They still have some percentage points to go before I would get super excited about it. Now let's go back to consumer cyclicals. Talk about Expedia Group for a second, and all I want to do here is see how high their forward PE has been in, let's just call it, normal years. So the cool thing about Expedia is they've been in business for a while, and if we go back to the late teens, I guess we would say, you had forward PEs 23, 15, and you're at 26. So 26, not terribly high, but I also would say that the momentum that they're seeing in their stock price, where are they at today? Plus 3%, plus 3.5%. The momentum of their stock price has put them right on the edge, in my opinion, right on the edge of what this news really means for Expedia, right? Knowing that the news today is still in a drug testing pipeline that could take several months to get out there. It doesn't look like it would impact winter. And speaking of winter, travel season into winter, right? Outside of family travel, which I think is still going to be a little touch and go in terms of airplanes and exotic locations. I think you're still going to see a lot of drivers. And you take that away and you have winter travel that's still kind of meh. Still going to struggle on business travel to some degree. I think you're still not going to be at par for leisure travel. And then, like I said, family holiday travel, I think, will still be confined mostly to automobiles for a lot of people. All right, so what's the point of this whole thing? I mean, obviously, travel, discretionary, going up on this very, very positive news that there could be another treatment coming out for those who do get COVID. On the flip side, even before the Merck news, we saw tech valuations starting to drip out a little bit, certainly the highest of the high growth names. So where do you stand? Which choice do you make between these two buckets of potentially buying low on the tech side or buying up on the travel side? And what is really interesting for me is that I don't see groundbreaking value on either side, because where travel stocks are inching up towards is a world of 100% capacity normalcy, and I don't think that we're quite there yet, and it might take yet another year or two to get there. So I don't know if I'd buy at the peak on travel, and then on the tech stocks, if they are going to bleed out another step or two, it's hard to get super excited, even though I love a stock like Crowdstrike and I might start like a high position and average down from there. You do have to wonder about the falling knife syndrome, because anytime you're 50x sales, you would have to at least be rational and recognize that there is room to the downside with those. All right, guys, just sharing my thoughts here. Let me know what you think of the Merck news, how it might shift the market. Do you believe that it is a game changer, or knowing that it's probably 6 to 8 months away, maybe it's just people getting excited for no reason? As always, please hit the like button if you enjoyed the content, subscribe to the channel. Thank you for your time. We'll see you on the next video.